Have you ever wondered how you can leave a lasting legacy for your loved ones, ensuring that your hard-earned wealth is passed down wisely, nurturing dreams and securing futures? In the tapestry of life, the art of estate planning weaves a story of love, responsibility, and continuity. It's more than just distributing assets. It's about empowering your family, protecting their dreams, and fostering a legacy that echoes through generations. Join us on a journey through the essentials of estate planning, where we explore the intricate threads of wills, trusts, and inheritance taxes, offering guidance on how to protect and distribute assets according to your deepest wishes. Together, unravel the secrets of wise wealth transition and embark on a heartwarming exploration of securing the future with love and foresight. Understanding the basics of estate planning. Estate planning is a vital financial strategy that ensures your assets are passed down wisely to your chosen beneficiaries after your demise. It involves making arrangements for the management and disposal of your estate during your lifetime and after death. The primary goal of estate planning is to fulfill your wishes regarding the distribution of your assets, minimize potential taxes and fees, and ensure a smooth transition of wealth to your loved ones. One of the essential concepts in estate planning is understanding what constitutes your estate. Your estate includes all your assets, such as real estate, bank accounts, investments, personal belongings, and even digital assets like social media accounts and cryptocurrency holdings. Properly assessing and cataloging your assets is the first step in the estate planning process. Central to estate planning is the concept of beneficiaries. Beneficiaries are individuals or entities designated to inherit your assets upon your death. They can include family members, friends, charitable organizations, or even trusts. Careful consideration should be given to choosing beneficiaries, and it's crucial to update these designations regularly to reflect any life changes, such as marriages, births, or deaths in the family. Another key element of estate planning is the appointment of an executor. An executor is a person you designate in your will to carry out your wishes and manage the distribution of your assets. This role comes with significant responsibilities, including filing necessary paperwork, settling debts and taxes, and distributing assets according to your instructions. Selecting a trustworthy and capable executor is essential to ensuring that your estate is managed efficiently. Creating a will. A will is a legal document that outlines your wishes regarding the distribution of your assets after your death. It is a foundational component of estate planning and provides clear instructions on how your estate should be divided among your beneficiaries. Creating a will allows you to specify not only who receives your assets, but also who will assume guardianship of minor children if applicable. To create a valid will, certain requirements must be met. First and foremost, the person creating the will, known as the testator, must be of sound mind and understanding. The will must be in writing, and it should clearly state that it is the testator's final will and testament. It must also be signed by the testator in the presence of witnesses who are not beneficiaries named in the will. The witnesses, usually two or more, must also sign the will to validate it. Updating your will is crucial, especially after major life events like marriages, divorces, births, or deaths in the family. Failing to update your will can lead to unintended consequences and disputes among beneficiaries. Regularly reviewing and revising your will ensures that it accurately reflects your current wishes and circumstances. In summary, understanding the basics of estate planning involves recognizing the components of your estate, choosing beneficiaries wisely, and appointing a reliable executor. Creating a will is a fundamental step that provides a legal framework for the distribution of your assets, allowing you to protect your loved ones and preserve your legacy according to your desires. Exploring different types of trusts in estate planning. Trusts are powerful tools that offer various benefits, including asset protection, privacy, and flexibility in wealth distribution. There are several types of trusts, each designed to serve specific purposes. One common type is the Revocable Living Trust, which allows you to maintain control of your assets during your lifetime, while ensuring a seamless transfer of these assets to your beneficiaries upon your death. Revocable trusts are flexible and can be amended or revoked as your circumstances change. On the other hand, irrevocable trusts, once established, cannot be altered or revoked without the consent of the beneficiaries. Despite their inflexibility, irrevocable trusts provide certain tax advantages and can protect assets from creditors. Examples of irrevocable trusts include irrevocable life insurance trusts and charitable remainder trusts, each serving distinct purposes in estate planning. Special needs trusts are designed to provide financial support for individuals with disabilities, without jeopardizing their eligibility for government assistance programs. By placing assets in a special needs trust, you can ensure that your loved one receives necessary care and support, while preserving their eligibility for Medicaid, supplemental security income, or other benefits. Navigating inheritance attacks. Inheritance attacks, also known as estate taxes or death taxes, are imposed on the transfer of an individual's estate upon their death. These taxes are calculated based on the total value of the deceased person's assets and can significantly impact the amount received by beneficiaries. The rules and exemptions related to inheritance taxes vary by jurisdiction, and it's essential to understand the laws in your specific location. One crucial aspect of inheritance taxes is the concept of the estate tax exemption. This exemption allows a certain amount of the estate's value to be transferred tax-free to heirs. Amounts exceeding the exemption threshold are subject to taxation. Estate tax laws often change, so staying informed about the current exemption limits and rates is essential for effective estate planning. To mitigate the impact of inheritance taxes, individuals often employ various strategies, such as gifting assets during their lifetime, establishing trusts, or utilizing life insurance policies. Gifting allows you to reduce the size of your taxable estate by transferring assets to your beneficiaries before your death. However, there are limitations and tax implications associated with large gifts, so careful planning is necessary. Additionally, life insurance policies can provide liquidity to cover the costs of inheritance taxes, ensuring that beneficiaries receive their intended assets without having to sell valuable properties or assets to pay the tax bill. Understanding the complexities of different trust types and inheritance taxes is vital in estate planning. By exploring these options thoroughly, individuals can make informed decisions to protect their assets, minimize tax liabilities, and secure the financial future of their loved ones. Protecting assets with living wills and powers of attorney. Living wills and powers of attorney are essential components of estate planning that address the management of your affairs if you become incapacitated. A living will, also known as an advance healthcare directive, outlines your preferences for medical treatments and life-sustaining measures in case you are unable to communicate your wishes. It ensures that your healthcare decisions align with your values and beliefs, sparing your family from difficult choices during challenging times. Powers of attorney, on the other hand, grant legal authority to a designated person known as an attorney, in fact or agent, to make financial and legal decisions on your behalf. There are different types of powers of attorney, including general, limited, and durable powers of attorney. Durable powers of attorney remain in effect even if you become incapacitated, making them especially valuable in estate planning. By appointing a trusted individual as your attorney, in fact, you can ensure that your financial matters are managed according to your wishes, safeguarding your assets and investments. Ensuring smooth wealth transition for beneficiaries, preparing beneficiaries for the responsible management of inherited wealth, is crucial for the long-term preservation of family assets. One effective way to achieve this is through financial education and open communication, providing beneficiaries with a clear understanding of their inheritance, including its value and potential tax implications. and any associated responsibilities empowers them to make informed decisions. Additionally, establishing trusts for minor or inexperienced beneficiaries can offer structured financial support. These trusts can have specific guidelines for asset distribution, ensuring that resources are used wisely, such as for education, purchasing a home, or starting a business. Trusts can also protect assets from creditors and help manage the tax burden on the inherited wealth. Encouraging open dialogue within the family about wealth values and financial goals can foster a sense of responsibility and stewardship among beneficiaries. This communication can include discussions about philanthropy, establishing family foundations, or other charitable activities, allowing the family to leave a positive legacy in addition to financial assets. In conclusion, integrating living wills and powers of attorney into estate planning provides a comprehensive approach to protect your interests during incapacitation. Furthermore, educating and guiding beneficiaries about wealth management and encouraging responsible financial practices can ensure a smooth transition of wealth, fostering financial stability and family harmony for generations to come. Thank you for joining us on this empowering journey of financial education. If you found our content valuable and inspiring, don't forget to hit that subscribe button and ring the notification bell. By subscribing, you'll stay updated with our latest videos, ensuring you never miss a valuable tip or insightful story. Your support fuels our mission to create a financially literate future generation. If you enjoyed this video, please give it a thumbs up. Liking our videos helps us reach more viewers, spreading the message of financial empowerment far and wide. We also love hearing from you. Share your thoughts, questions, or personal experiences in the comments section below. Your comments not only enrich our community, but also provide opportunities for meaningful discussions. Thank you for being a part of our community. Together, let's shape a brighter, financially savvy tomorrow for our children. Subscribe, like, and comment now, and we will meet in the next video. God bless you.